Hey everyone, welcome back to Corporate Decoder, where we uncover the secrets hidden within corporate filings and the latest company news. Today, we're diving deep into a filing that shows a company making some rather interesting moves to secure its financial footing. Before we dive in, if you're new here, consider subscribing. We break down complex financial documents so you can understand exactly what is happening behind the scenes. Also, we have a fantastic community on Discord where we discuss these findings further. The link is in the description below. This is a Form 8K filing from CV Sciences Incorporated. Now, usually an 8K signals a significant event has happened, and this one certainly does. It tells us about a deal they made to get some much needed cash. Think of it like a quick update, not a full quarterly report, but something important enough to tell everyone right away. So, what happened on the 6th of October of last year, 2025, CV Sciences Incorporated, which we LL call the company, signed an agreement to sell a note. You can think of a note like an IOU, but with more formal terms, they sold this IOU to an investor, and in return, they got money. The deal was for a note worth $600,000, but here is where it gets a bit more complex, and frankly, a little less favorable for the company up front. Even though the note was for $600,000, the company only actually received $300,000. How can that be? Well, there was a hefty discount. They call it an original issuance discount of $150,000. This means for every dollar they wanted to borrow, they had to subtract a good chunk off the top. On top of that, they paid another $150,000, which they call modification fees associated with changing previous agreements. So, out of that initial $600,000 note, the company netted a rather small $300,000. They also incurred about $13,000 in fees. This suggests they were really in a bind for cash. Now, when do they have to pay all this back? The full amount of the note plus any interest or fees is due by the 6th of April 2027. That is not a whole lot of time, just about a year and a half from when this report was filed. They've also committed to making monthly payments of over $46,000, starting in April of 2026. These payments are part of paying back that original $600,000 note. This is a critical part of the deal. The note is secured by all of the company's assets. That means if CV Sciences can't pay back the loan, the investor has a claim on everything the company owns, including its subsidiaries' assets. This is a very strong signal that the company was in a tough spot financially and needed to offer significant collateral to get funding. Not only are they pledging their regular assets, but they're also using their intellectual property as collateral. This is usually reserved for companies where their intellectual property is a core part of their value. It shows how serious this situation is. The agreement also outlines what happens if things go wrong. These are standard events of default. It includes not paying back the loan on time, providing incorrect information, failing to meet other promises in the agreement, or if the company runs into financial trouble like bankruptcy. And if an event of default happens, the investor could actually increase the amount owed. For some serious issues, they can add 20% to the balance, and for others 5%. This is a hefty penalty and could significantly worsen the company's financial situation. On top of increasing the balance, if an event of default happens, the investor can demand the entire remaining amount of the loan be paid back immediately. This is known as acceleration and can put immense pressure on a company. And finally, if a default occurs, interest will start to rack up at a very high rate, up to 18% per year, or whatever the legal maximum is. This makes it very expensive for the company to recover if they miss payments or violate the agreement. These documents, the purchase agreement, the note itself, the security agreement, and the intellectual property security agreement, are filed as exhibits. While the full details are in those confidential sections, the summaries tell us a lot about the tough terms CV Sciences agreed to. Now, let's look at the bigger picture for CV Sciences. This filing really highlights a company that is struggling to raise capital on favorable terms, receiving only half the principal amount of a note and pledging all assets including intellectual property, suggests a high degree of financial distress. This kind of deal is often a last resort when traditional financing isn't available. The company is essentially betting that it can turn things around quickly to avoid defaulting on this very expensive debt. The key risk here is the acceleration clause and the high default interest rate. If the company fails to meet its obligations, it could find itself owing much more money very quickly with all its assets on the line. The monthly payments, though substantial, are designed to pay down the principal over time, but the real danger lies in a default scenario. CV Sciences operates in the consumer health and wellness space, particularly with products like CBD. This market can be competitive and subject to regulatory changes, which can impact sales and profitability. This financing situation is a major concern for their ability to invest in growth or even sustain operations if sales don't pick up significantly. My assessment is that CV Sciences is in a precarious financial position. The terms of this note indicate desperation for cash, and the secured nature of the loan with its harsh default penalties put a lot of pressure on management. The company needs to demonstrate a clear path to profitability and strong revenue growth to satisfy both its obligations under this note and to reassure investors about its long-term viability. The real opportunity for them is to leverage this cash infusion to successfully execute their business strategy, but the risks are undeniably high. Alright, that is our breakdown of CV Sciences Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings, and don't forget to check out the Discord link in the description to keep the conversation going. Thanks for watching, and we'll see you next time.